Hey traders, it's John Fortune here for this week's Weekly Forex Forecast. I hope you're having a great weekend. Let's start off by looking at the US dollar index. In last week's video I noted that we had a really nice sell-off in the DXY, and I went into last week with a bearish bias on the DXY, and dollar weakness was my main theme for last week, to look for dollar weak setups. We did have a nice pullback last week and we traded into the 90.86, and we actually had a head and shoulders reversal intraday from this level. I posted this as it happened live on my Twitter account for my followers, so if you do enjoy the forecast and you want to get some more updates on these markets throughout the week as more information comes in, feel free to join me on Twitter where I will be posting those updates during the week. So heading into this week, it's really quite straightforward because we've had this reversal to the downside now in the DXY, and this looks like the first move down. So very simply put, going into next week, any pullback in the DXY towards the top of the channel is going to be viewed once again for anybody not involved from last week as another great opportunity to start to look for bearish reversals down to the next key area of support to the downside and the target set at the 89.71. Now, of course, I won't be looking to trade the DXY itself, but if we start to get this price action and we get further declines, which is what my view is going into next week, this will affect the dollar pairs, and of course I will be looking to trade those currencies against the dollar in that way, i.e. with dollar weakness in mind. SPX. Now last week in the SPX I was looking for a pullback and a rally higher, but we didn't have any break higher. We pulled back and we traded straight through the lows. So unlike the DXY that we looked at where we had a correction to the upside and then head and shoulders reversal down, we just traded straight through. We didn't have any bullish reversals in this market. Going into this week, you can see we broke the trend line and we bounced and pulled back. Now this is where I think trend lines can actually be a bit counterproductive. If you're looking to trade this on the backside of the trend line, you're going to be trading straight into key support. So I am going to be taking this off here next week. It just simply tells me that this rally to the upside has now come to an end. We've had a correction. The key level here for me is the 4121. We have broken back above this, so unless we come down below this, I would be bullish on the S&P 500. So going into next week, any pullback and a correction into the 4121 would be viewed as an opportunity to look for an inverse head and shoulders in the DXY. I'm going to be looking up towards the next key area resistance, the upside and the target set at the 4273.3. Eurodollar is really just the inverse of the DXY we looked at. Was looking for a pullback before breaking high last week, and that head and shoulders reversal in the DXY sparked this rally to the upside in the euro. Very simply put, for anybody not involved in Eurodollar to the upside from last week, any correction in this area would be viewed as another opportunity to start to look for bullish reversals up towards the next key area resistance, the upside and the target set from last week at the 1.2192. If I switch over to the daily chart of the euro dollar, it looks like we're also making our way towards the major high over here and the target of the 1.22490. Now this is important to note because as we're coming down in the DXY, we could very well make target 2, the 1.22490 next week in euro dollar. The key is going to be to keep an eye on the DXY and see when it trades into the 89.71. I have a feeling that we could trade into the 89.71 in DXY and trade into the 1.2249 at the same time next week in these markets. Next is crude oil. In last week's video I highlighted this channel for you to the upside, and I went into last week with a bullish bias on the oil. I wanted to see a pullback towards the channel bottom before looking for bullish setups, bullish reversals to the upside. We have started to break to the upside, so going into next week, any correction once again back towards the channel bottom will be viewed as another opportunity to look for bullish reversals up to the next key area resistance, the upside and the target set at the 67.24. Next is gold. Now gold is a very interesting market this week because gold tends to move on real yields. In other words, yields adjusted for inflation. Coming into this week, it's interesting because when we look at the bond market, we can see 10-year yields are stuck in a range and they're actually slightly flat to bearish currently. And at the same time as this is happening, we're seeing inflation misses in the US. We're seeing quite a large jump in inflation. When you put those two things together, you're going to see real yields declining, and this should help propel gold to the upside, and it will support it to the upside. So there are really good fundamentals in place for further advances in gold. Coming to this week and looking at the chart, I noted for you last week this breakout of this ascending triangle pattern, and I wanted to see a pullback towards the breakout of this pattern, and that was an opportunity to look for bullish reversals and bullish setups in this market last week. We did have a nice pullback and we started to rally to the upside. So very simply put, going into this week, for anybody who's not already positioned into this market, any pullback towards the trend line once again will be viewed as another opportunity to start to look for bullish reversals up towards the next key area of resistance to the upside and the target set from last week at the 1868.44. Silver, in last week's video I highlighted this inverse head and shoulders pattern to the upside for you, and that we'd broken out above the 26.639. This is a very key area of resistance, potentially looking to turn support, and I highlighted the fact that I wanted to see a pullback in this market before looking for bullish reversals to the upside. Last week was quite a corrective week. We didn't have any big directional moves, but what we did do is we started to pull back and we did have a nice reversal in silver. If I drop down to the 1 hour chart, you can see this reversal last week in more detail, this inverse head and shoulders break to the upside. So very simply put, for anybody not involved from last week, what I would be looking for is a continuation of this move we looked at last week. Any pullback towards the trend line once again would be viewed as another opportunity to look for bullish reversals up towards the next key area of resistance to the upside and the target set from last week at 28.18. US dollar CAD. Now last week US dollar CAD was featured in the Weekly Forex Forecast as one to watch to the downside. I noted we had really nice momentum breaking out down below the previous low, and US dollar CAD is quite straightforward. We're just channeling to the downside here towards the 1.2005. We had a really nice sell-off from the top of the channel and a breakout last week. For anybody not involved from last week, let's drop down to the 1 hours. And you can see any correction, once again, in this market next week will be viewed as a great opportunity to once again look for bearish reversals down towards the next key area of support to the downside and the target set from last week at the 1.2005. US dollar Swiss franc. This was a market highlighted in last week's Weekly Forex Forecast as a market start to look for good opportunities for sell setups and bearish reversals to the downside. We did take out the target set from last week before bouncing, and this gave us the second opportunity to start to look for shorts in US dollar franc last week. So very simply put, for anybody not involved from last week, and you could have timed this entry with the DXY head and shoulders that I posted on Twitter last week, but for anybody not involved, any pullback once again towards the 0.9080 will be viewed as a second opportunity to start to look for bearish reversals down towards the next key area of support to the downside and the target set at the 0.8926. Pound dollar. Last week we broke out of this double bottom in pound dollar and we went straight to the target set from last week's video at the 1.41160. So very simply put, this pullback is just viewed as another opportunity to look for bullish reversals in this market up towards the next key area of resistance to the upside and the target set at the 1.4232. Aussie dollar. Last week I was looking for a pullback towards the trend line, and we did come back and we bounced from the trend line here. You can see we failed to break the previous low. This is bullish, and going into this week, especially if we start to see further declines in the DXY, any correction would once again be viewed as an opportunity to look for bullish setups in this market up towards the next key area of resistance, the upside of the target set, the 0.7894. New Zealand dollar. Now we had a decline in New Zealand dollar last week to the downside, tested the trend line as we had that correction in the DXY before the DXY started to roll over. This is still bullish, but notice how we're lacking momentum compared to US dollar Swiss franc, US dollar CAD, pound dollar, all of which I think are better markets going into next week. But this market is still bullish, and I will be keeping my eye on it going into next week. Any correction back towards the trend line will be viewed as an opportunity to look for potential bullish reversals up towards the next key area of resistance, the upside and the target set, 0.7359. CAD yen. This has been a really nice performing market to the upside, and I've been highlighting this in previous forecast videos. We did take out the target at the 90.020, and we almost took out target 2 from last week. Very simply put, going into this week, what I would like to see, because we're quite close to the target, is one of two things. Is either we take out the target first and start to correct, or we just start to correct in this market, and any correction in this market will be viewed as an opportunity to look once again for bullish reversals up towards the next key area of resistance, the upside and the target set at the 90.79, assuming it hasn't already been taken out over here. If it has been taken out, then I would be looking up towards target 2 at the 91.56. Next is franc yen. Now franc yen is a market I've been highlighting to the upside, and we've had some really nice price action. We broke out of this bull flag, which was marked in previous videos. We took out the 120.790, which was the target set. Once we took out the target, we pulled back and retested the breakout point, and that was the second opportunity to look for bullish reversals into target 2 at the 121.61. So for anybody not involved from last week, we're coming quite close to the target set. So any pullback before taking out the target would be viewed as another opportunity to look for bullish reversals in this market up towards the next key area of resistance, the upside and target 2 from last week at the 121.61, And if we start to break through here, we're going to be looking up towards target 2 at the 122.68. Pound yen. Last week I highlighted this market for a move to the upside, and I identified this ascending triangle type pattern. I was looking for a breakout and a move into the 153.790, and we broke out straight into the target from last week. So going into this week, this is a market I am interested in keeping an eye on once again. Any pullback in this market will be viewed as another opportunity to look for bullish reversals up to the next key of resistance, the upside, the target set at the 155.40. Aussie yen, last week we took out the target at the 85.41. Like Aussie dollar and New Zealand dollar, this market is quite choppy, and the same applies for New Zealand yen as well. I think the other markets are probably better going into next week, but we have pulled back and retested the 84.48, which is the top of this ascending triangle breakout we noted in last week's video. So any pullback in this market, once again, would be viewed as an opportunity to look for bullish breakouts up towards the next key of resistance, the upside, the target set at the 86.28. And finally, we have New Zealand yen. Now, last week we were looking for further advances to the upside in this market. We noted the breakout of the trend line, we pulled back, and we bounced at the bottom of this channel. And that was a buying opportunity from last week. For anybody not involved from last week, we're quite close to the target. So what we'd like to see is any correction, first and foremost, would be viewed as another opportunity to look for bullish reversals up towards the target set from last week, the 79.59, and if we can break through here, we're going to be looking up towards target 2 at the 80.15. So that is it for me for this week, guys. Those are the markets I like going into next week. If there are any markets you're looking at or you're interested in or you're trading which are not presented in this video, leave a comment underneath the video telling me what markets you're looking at, and I will have a look through them. And if there's anything interesting, if there's any nice setups appearing in those markets, I will post the analysis for you on Twitter. Don't forget, I'll also be posting midweek updates on Twitter on these markets as they develop. So if you'd like additional information on the markets during the week, feel free to join me over there as well. With that said, I want to wish you all a nice weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.